How's it going, guys? This is Patrick and you're trading with Prime. Just wanted to show you a quick market recap here. This is the S&P 500. This is what we're going to be looking at today. Before we begin here, I just want to go back to my browser here and just take a look at a couple things. This is the CBOE market summary for Friday, August 14th. Soon we'll have today's, which is Monday's. We're going to go into here. I just wanted to show you the equity put to call ratio right now is at 0.54 on Friday. And what this means is 0.54. So there's 54 puts for every 100 calls. You can actually go in here and change the dates. And a good thing to do is to go back at all-time market highs and look at the put to call ratio. If I go to forecasting the market direction with the put to call ratio, I wouldn't say that this strategy could be implemented in trading itself. Let me get this off the screen for you. Here we go. I wouldn't say that this strategy by itself would be a way that you could trade. It's almost like the bond market. It's like it's such a slow process that it could take a really long time of being wrong in a trade before you end up being right. You know, the market can in the saying is the market can stay wrong longer than you can stay solvent. So this is a pretty cool article, and I'll put the link in the description of the video. And something to keep an eye on, just this one part right here, the key takeaways. One of the most reliable indicators of future market direction is a contrarian sentiment measure known as a put to call options volume ratio. On balance, option buyers lose about 90% of the time. As often happens when the market gets too bullish or too bearish, conditions become ripe for a reversal. And what this is saying is this is, imagine for a minute that you're in a ferry boat, and you're getting onto a ferry boat, and they're loading all the cars to one direction. On the right hand of the boat, you have a bunch of call buyers, and on the left hand side of the boat, you have a bunch of put buyers. So you have two different groups of people who are betting the market is going to go one direction or the other. Right now, you have a lot of people who are loading in more and more calls. And the theory is that if you get too many buyers to one side, and this, for instance, is the call side, that the market will soon run out of new buyers. And if it runs out of new buyers and begins to sell off, there are so many people that are long the market that the pullback could be pretty, I don't want to say extreme, but it could be pretty in depth as far as price movement in the actual market. So I'll put the links to these articles in the description. The other thing we're looking for market reversals is not to sound, again, it's not all the time, but it's just one of these things you can kind of add to your trading, and you'll get better at this as you continue trading. The more years you get under your belt, the easier it is to see these things. What we're looking for, and I'm just going to pick this, this picture right here you see on your screen. This is what we're looking for in the media. We're looking for articles that look like this. And we're looking for big, happy, cheering faces. We're looking for all this good news. We're looking for, green on the screen. I want to see the most green as possible. And it's going to start to feel like the market's never going to turn. It's going to feel like the market is never going to go down. In fact, let's all just go long because it's always going to go up. And that's going to be the broad feeling. And the reason, not to sound like a conspiracy theorist, but part of this reasoning is the institutions need a place to sell their shares, and they need as many buyers as possible. And I'm not saying that the media does this on purpose. I'm just saying that often you will see articles that come out of how bullish the market is and it's never going to turn, to only find the market turning a couple days or a few weeks later. And the same thing happens on the bottom. So I'm going to go to the chart here. Just, do your own homework, right? Go back to this time period in the market, right? Go back and look at the headlines. Go look at what the market was doing. Go look at what the news articles were saying, and you'll see what I'm talking about. Because back here, it was blood in the streets, sell the market because it's never going to go up. That's the whole thing. And really what we saw was institutional buying in this time period. And you actually saw this buying continue on as we continued through here. You saw more and more institutions buying, and then again you saw it right here. And really, any dip back to this trend line, you saw the institutions step up and buy. And that's also if I draw this trend line here, which I kind of have it on the screen already, but this is a buy the dip market. It has been since the March lows. Actually, it's been going on for years, but in this case, it's been a buy the dip market from the March lows. So let's get into a little bit of technical analysis. Right now, what we're looking at is we're looking at two possible areas. Right now, we have the high over here of 339.08, and then we've been trading sideways in this range right here, just underneath 339.08. What it feels like right now is we are going to gap above this price. Since we've been trading directly under the price, we're most likely going to gap above it. Just looking at the chart. The only problem that I see right now is that it feels a little too obvious. And what I mean by that is I'm going to zoom in here. And by the way, if you saw my post on Facebook and also the Discord, this is what I was talking about. Is it just feels too easy. I feel like anyone can look at this price action and already have the answer of, well, this price action equals a gap higher, or this price action equals higher prices. What I want to say, though, is that yes, we could have higher prices. I haven't actually looked at the futures right now. It looks like we're trading. The bid is 338.01. The ask is 338.03. But just looking at this for a minute, it feels suspicious. Like it feels like it's just too obvious. And a lot of times when we see the market doing things that feel really, okay, so here's after hours. We haven't really moved around. A lot of times when it feels like the market is just being too obvious about things, that's when I really put it into question of like, do I want to be a buyer at these prices? And when I'm not just talking about this, I'm talking about any stocks that are in the S&P 500. And I don't mean your long-term positions. I just mean your, your shorter time frame swinging trades kind of thing. But let's give it the benefit of the doubt. And so far we saw a price moving up. We saw it consolidate, moving sideways. I'm going to change the color of this so you can see it a little bit better. In fact, I'm going to zoom in a little bit here. We keep seeing this pattern where we go up, we trade sideways, we go up, we trade sideways, and we keep doing the same kind of pattern here. The thing is one of these mornings we're going to wake up and the floor is going to be, falling out below us. But just looking at the chart here, as you can see, each day makes like almost like a bull flag kind of pattern. We trade sideways consolidating. To me, the short trade we've been talking about is probably off the table if we go run up and hit this spot right here. Now, I did place some VIX calls today, a little bit of protection, and I posted those in the Discord. And if you guys would like the Discord information, it's in the description of the video. Underneath all of the videos, there's a link to our Discord if you want to be a part of that. So just looking at here, we did gap higher over Friday over the weekend into today. We traded sideways all day, maintaining this zone. So to me, this is a clear bull flag kind of a pattern. And so I would expect that we either gap up to 339 or possibly just above it. But to me, taking a long trade at all-time highs to me is risky. For my trading plan, I'm not saying it's a wrong that, if you did take a trade to the long side today and you're swinging it. I'm just saying for me and my kind of trading strategy, I don't particularly like doing those kinds of trades. However, I do like taking trades off support. And so I was looking for different levels of support as far as the last time the institutions really stepped in and defended these levels and on higher volume. And that's what we're looking for. Let's go to Qs. So looking at the Qs here, now I want to put on the yearly chart or the year to day. So again, we're at all-time highs. We put in all-time highs again today, closing all-time highs. We did have this rising wedge on here, and I don't know if you guys remember talking about it at this time period. This is why I don't like trading. I don't necessarily like trading wedge patterns, and the reason why is because even if they break down below the wedge, they can always trade back up. So no matter how you draw the lines on the chart, at the end of the day, you might have 45 different lines going in different directions. There really is no telling. I don't like doing it that way. It is nice to know about it, but I would rather just simply buy off support. And just, we did take a trade right here off support. So that's the thing is buying off support in an uptrend, selling out resistance in a downtrend. That's the name of the game. until it's not really. Let's go to IWM, and then we'll start wrap. Actually, instead of IWM, let's do this. Let's go to, because I wanted to look at these other ones. Let's look at gold really quick. We saw some news over the weekend, or maybe it was Friday or Saturday. We saw a little bit of news come out about gold. Just want to give you the prices. I'm going to remove this line off the screen here. So we saw, you know, right now we're in the middle of a gap. This gap could be filled, and I have a price level of closing print 190.15. So there's going to be a little bit of resistance up here, 190.15. I would expect this gap to get filled probably in the next couple days. And then again, we'll be at the highs again at 194.45 if we can get to this. But there will be a little bit of resistance at that price level. You know, we call it the zone of 190-ish. Let's go to silver. And if you missed this trade, if you didn't buy it a couple days ago, I don't know if I would be willing to chase this at this point. I would wait for a pullback, in my opinion. Same thing with silver. We're in a gap. The opening price on this candle back here on the 10th of August. Opening price is 26.59, so call it 26.50 price area. There's going to be a little bit of resistance. You do see a lot of volume. This is something else to kind of note a little bit, is you do see a little bit of volume on this area, and then you see this volume here. In the past, I'm not saying that's what's going on right now, but in the past, this has looked like distribution, institutional distribution, where what they will do is they will run the price up and then they will sell it to you know, brother, sister, mom, dad, family, dog. They will sell us their shares, and then the price will pull back a little bit. We'll buy it again. We'll let it run up again, but then institutions they'll keep selling into this strength. That is possible what's going on, but it's really hard to trade off of that information if that is what's going on. For me, price is the arbiter, and right now price is trying to fill a gap, and to me it's bullish. And let's look at TLT, and then I'm going to wrap it up for the day. Okay, so TLT, I did a post on this today. You can see, you know, just looking at this price range right here, I posted about this as far as support of 161, resistance 172. That's your support, and they're really in zone, so I wouldn't take this down to the penny like anything that we trade. It's never to the penny. They're really just zones. And so that's something to also pay attention to, is where are we at in the zone? And it has to be treated, in my opinion, it has to be treated as the zone until the zone is broken. The post I did today was primarily about, we could see ourselves picking up if you were paying attention to back here, you know, where we've talked about this before, where the bond market kind of broke right here. It snapped a little bit. It was really volatile, and then it slowed down, dipped down, the buyer stepped in, and then we started rallying a little bit here. Now we're pulled back to here, and the question that I have is, are we setting up for another snap, or are we setting up for a little bit of consolidation to the downside? Or the last option would be a little bit of consolidation and then to the upside. Right now I'm positioned in TLT to the long side, but with the full understanding that this probably isn't the low in TLT. We could actually see ourselves coming back down to 161.75. And I know I said I would wrap it up, but I just want to look at one last chart because we didn't have a trade in this today. So I usually don't mess with IPOs, and somebody posted this in the Discord probably a couple weeks ago. And so I've been trading it on and off for the last couple weeks. Did a post today about this. Actually, we did a post on Saturday, but then we did another one today. I'm going to go down to the hourly chart. This was the 20-day 1-hour chart. And so even looking at this, and I hope you guys can see this on your screens. I'm going to zoom in just a little bit here. We see a high of $87 back there. Anyway, so I'm just having this up on the screen here. We did see more support down here. I know there's really support in this price zone down here at 56.70. You saw a lot of institutional participation as far as these are technically breakout candles to the upside. So I would for sure expect institutions to be defending that area. You saw on heavier volume. That's also something to consider, is that, was this a breakout, and are we back testing this downtrend sloping line? And you've heard me say this before, I don't like taking these kinds of patterns normally, but in this case, I do like what I see as far as this support zone that's underneath here. And to me, it looks like clear institutional / retail investors purchasing this company. around this price zone. So if this does hold, which I saw a little bit of hold, it held down here, and actually we posted this trade today. I'd have to actually go look at the time, but I believe that it was around the lows. I'm gonna zoom in one more time. I believe that the post came in today. We were selling off here. We did a post on it and then we purchased it right here. So this could be a bear flag kind of a pattern, and it could play out to the downside. If it did, it looks like it would line up better with our, not only our, what we called this breakout kind of a candle with institutional participation. It looks like it's a nice price zone in here as far as buyers stepping up to the plate, and it would match with our downward sloping trend line. So this would also be an area to purchase. Maybe I'm a little bit early today, but time will tell. We'll see how it goes. We'll just have to play it one day at a time. That pretty much wraps it up. If you guys enjoyed this video, go ahead and hit the likes button if you've gained value out of the video. Also hit the subscribe and then bell notifications. We do go live every Sunday, 5 p.m. Pacific Standard Time. Next week, we're going to do, instead of options, we're going to just be going over general stocks, member picked stocks, and ticker symbols that people want to load into the comment section. So join us live. We'll help out with any kinds of technical analysis if you need help with that. Otherwise, have a good rest of the week and really play it safe as far as the market all-time highs go. Talk to you soon.